I do want your thoughts, though, on Metro Brands, because it's the first corporate on our that we're speaking to today. And the stock has had a very strong run-up. The current price is around, what, 800 rupees. The issue price was 500 rupees. And as we know, the company is backed by Rakesh Jhunjhunwala pre-IPO. His company, of course, owns 14% stake in Metro Brands, and it has reported its best ever revenues, EBITDA and profitability. So it's looking pretty good at the moment. Nissan Joseph, who's the Chief Executive Officer at Metro Brands, joins us now to talk about that. Mr. Joseph, good morning and thanks a lot for joining us. I just want to ask you about the growth plans that you have. What was the same-store sales growth in Q1 and how has it been in Q2 up until now? What is the sustainable growth rate that you're looking at?
Right. So I think, Sonia, thanks for having me here this morning. We don't disclose same-store sales growth, but I can assure you that all of our concepts of Metro, Mochi, Walkway, and Crocs had some very nice gains in all the markets that they operate in all the different categories that we sell in. As we look to the following quarter, the RAI reported strong numbers for July, and Metro is definitely part of that momentum that seems to be happening in India all over. Inflation doesn't seem to have affected the demand as much as one would have thought it might have. We continue to see good demand for our products across tiers, across categories. So, I think it speaks well to the strength of the overall economy of India as consumers' incomes are rising and the aspirations are rising. They're looking to upgrade their lives, and Metro plays very well into that space of, affordable premium products.
Mr. Joseph, hi, good morning. If you were to divide your products price-wise in different buckets, starting from the lowest end to the highest end, is there any pressure at all at the lower end? I mean, is there a difference in growth rates also? Yes.
Sure. So we've seen a drop-off in actually the low end of the spectrum, but that's really caused by the increase of price, caused by the GST increase that went from 5% to 12%. But overall, we've seen our average selling price increase considerably. We've seen that our growth has actually come from the above 3,000 sector as well. So we're not seeing that erosion happening in the lower end of the sector as one would have thought would happen. But at the same time, where we're seeing some deflation in sales is only because we've exited those categories as we've taken price increases, or there's been GST increases in those segments of the shoes.
No, I mean, the only point is that, then the pressure is on the higher end segments to do better, and and that segment has been doing well, not just for you, but for others as well. But if the lower end is not picking up in terms of volumes, etc., and you're saying that you're exited some of that as well, is there disproportionate pressure on the premium end to do very well? I mean, to continue to do well to kind of drive this engine?
Sure. I think the thing to remember is when you sell a premium product, it offsets a lot of the low-end product sales that you may or may not have had. So that's number one. And then, when you talk about a 5% or a 10% hike in a product that's 500 rupees versus 3,000 rupees, the delta of volume is enough to offset any kind of loss of units that you may have on the lower end of the segment. But we're very pleased to see that most of our tiers of price are growing. The only one, like I mentioned before, that we've seen a decline is at the lowest end, but that's really been caused by us raising our prices due to the GST increases.
Okay. Can you tell us about what the expectation is going forward in terms of your expansion plans? You did say that you intend to open 5 FitFlop stores in FY23. Are you on track to do that? And what kind of realizations are you looking at in terms of FitFlop? What could it do to your blended margins?
Yeah, so the amazing thing with India right now is there's a huge rush of retailers opening stores all across India, and we're seeing that rentals are getting quite expensive again, and that's okay because I think it speaks to the economy at large in general, and that bodes well for all retailers in India. Having said that, we're very comfortable with the 2 guidances that we've given, which is we'll open 260 stores in the 3 years after we listed, and the fact that we're going to add on an additional 5 stores this year of FitFlop. From a margin perspective, Sonia, what we see is that all of these brands that we bring into the country under our own direction, under our own wings, tend to be margin accretive to us. They do not tend to be margin dilutive, both at the top end and, of course, at the flow-through rate as well. while I think FitFlop is also a premium product, right? So let's not forget that the average FitFlop sells for 7,000 rupees for a sandal. Obviously the demand for that product is not as robust as something that might have been priced at 2,000 rupees. Having said that, though, there is a lot of demand for the product that we've seen across India that we feel optimistic and comfortable with our guidance of 5 stores.
You said 7,000, Mr. Joseph? A flip-flop?
FitFlop, yes.
Yeah, the FitFlop brand is actually, it's quite premium. I mean, as opposed to what, contrary to what people think, right? I mean, it is an expensive product, no two ways about that. But all right, Mr. Joseph, if you can just tell us, how is the e-commerce platform doing for you in the sense you have about, I think, 7 to 8% of your business that comes from e-commerce currently. Given this rising trend of people shopping online, you think it's going to go up in the near future? And how does that change the business economics for you?
Yeah, so I think it's been very exciting for us to see Q1, Sonia, from the standpoint that we saw e-commerce continue its double-digit growth for us. At the same time, we saw some huge increases in the offline space. I think that what that shows is, the consumer, while they looked at e-commerce as a channel while we had COVID, are now seeing it as an optional channel as opposed to the go-to channel. They still love offline shopping, as has been shown by the performance of our stores, our brick and mortar stores. But I don't see e-commerce necessarily going away, which is exciting. But the beautiful part about e-commerce is it's moved from being a discount-led channel to really a convenience-led channel where consumers are willing to pay the full price for the products that they get, as opposed to the big discount hunt that it used to be. So we continue to see that trend of consumers wanting to buy the right products at the right price on e-commerce as they do in our stores. So that is very exciting for us to see that growth continue, even though stores have come back very strong post the COVID restrictions being lifted.
How many pairs of footwear did you sell, Mr. Joseph, say in FY22, and how many will you sell this year? I mean, what kind of growth are we expecting in volumes in 23 and 24?
So I think it's a little hard for me to give future-looking statements, and I think you'll respect that. But having said that, though, I think, the robustness of India continues. I think we've only scratched the surface of the opportunity in India, both as metro brands, but also as a nation. We have a bright future ahead of us for the next 10 years. When you look at all the emerging markets, India has a wonderful story with regards to, the under-indexed manufacturing that we have, the under-indexed services that we have. So that bodes well for metro brands as we look to the future. The other key thing to understand is that middle-class incomes are rising, and so do aspirations when middle-class incomes rise. And the conversion of Tier 3 cities to Tier 2 or Tier 4 cities to Tier 3 cities, that continues to make opportunities for our stores, whether it's Metro, Mochi, or Walkway, or Crocs, or FitFlop, to open in more towns across India.
Okay, well, it's been a stellar ride that your stock has seen. It's up 50% in the last 6 months. All the best, and hope you reach fruition as far as your expansion plans are concerned.